All right. Now we're going to talk about a pretty boring subject, and that's insurance. But when you tie in blockchain with it, it makes it interesting, and there's a lot of benefits in doing so. I have the team from Fida Finance joining me on this one. I have Rodolfo and Motaz joining me to talk all about this and give us a really good idea of how this all works in the blockchain space. So guys, welcome to the podcast.
Hi, pleasure to be here.
Good to be here. Thanks, Peter.
Okay, so let's get an idea of what you guys are building in this space first.
Okay, so bringing in insurance altogether is an ginormous task, and we're up for it, but we're taking it in small steps. Fida is sort of the cornerstone, the back end, and the marketplace upon which you can then start building out an actual real-life ecosystem for, well, the world's first digital nation, right? The network state. As such, Fida is a risk transfer protocol that breaks up all these treaties, all these opportunities that insurers bring in, and then lets investors and the Cardano community support the protection and the help and the services that these insurers will provide, of course, with the incentive to do so, right, by collecting the premiums there.
Currently, the marketplace of risk transfer exists. You find it in Dubai, you find it in Lloyd's, in the US. There's a lot of people trading these policies. What Rodolfo and Fida are trying to build is the protocol itself. So you add transparency, speed, capital, and that's what we're trying to solve. It's a big feat, and the market is looking for something like this. It's a matter of us and people in Cardano to populate it with risks and policies and capital, and that will come in time. In terms of what we're doing also with Fida is we're trying to build products on Cardano. The products that we're building are chain agnostic, can be applied anywhere. But to be honest, we fell in love with Cardano, the community, the ease of use, the support we're getting, and the security. You can actually stake without a lot of liability. And that's like one of the first thing we thought to solve, which is the problem in Ethereum. But now in Cardano, that problem doesn't exist. So one of the products we're building is cybersecurity for crypto holders. You buy your NFT and you get 24/7 response team and the compensation in case an accident or a loss occurs. So that's it on its basics.
There's a lot here to unpack. And for a novice like myself that doesn't know much about the insurance space, other than I buy the insurance, hopefully the insurance company pays out in the future, I'm trying to get an understanding of how this all works from the user's point of view and where exactly you guys fit into the whole spectrum of the insurance process. Because there's a lot to it, and Rodolfo, you've told me all these bits and pieces as well. So from the end user that's buying an insurance policy, how does it look for them going through your platform?
Excellent. So that's exactly one step before Fida, where Fida starts. So
gotcha. Okay.
If you think about where someone from the Cardano community is going to look at Fida, it's going to be as a set of let's call them NFTs because we're in crypto that they can choose to invest in, and they'll see, oh, this NFT is for the cybersecurity product that Mo was talking about. Maybe there's this NFT is for bridge insurance, for another product. Maybe this NFT is for bicycle insurance, right? On some place in the world. It could be farmers insurance, earthquake insurance. The job, the purpose of the marketplace is allowing investors to build out a portfolio that they can then say, okay, so this is overall very low risk and giving me 25-30% yield. So that's what you're going to see. And the cards, the NFTs, they'll always be tradable afterwards. So that's a really nice solution to the funding problem for in the insurance industry. right? And on the other end is on the like, okay, I want to be insured, and on the other end, that's outside of FIDA scope, but more into, for example, one first insurer is called Pains, and Moken, that's exactly the use case you were talking about.
Well, I want to add to your example. Just examples, I think, are the best ways
Yeah,
just to explain a problem and a solution. So you buy travel insurance. It's easy to verify who bought it. It's easy to verify if something bad happened during that trip. So a flight delay, a horrible accident, all of this stuff can be parametrically triggered by oracles. And that's where we want to come in and say, okay, instead of you buying it from Allianz or AIG or Farmers, your travel insurance, you post it on the protocol and say, I'm paying 100 for a cover up to 10,000. Anybody interested in covering me versus the other existing markets? So that's the protocol we're building. So you have now two options: either become a policy provider, which is a buyer of insurance, or a seller of insurance. You provide cover or buy cover. And that's the protocol
yeah,
we're building. And I think air travel is the easiest one to tackle.
Yeah, you can track the planes. You can see if flights are delayed. You see if the plane's crashed.
God forbid. Yes, God forbid. Yeah.
Or yeah, it does happen, but hopefully not for anyone that's listening to this podcast. But there are those feeds that you can tap into, so you can verify
Yeah.
if the insurance policy should be paid out or not. Okay, this is really interesting. So you're allowing users to be a part of the insurance process. One,
yes.
just confirm all this, you could buy an insurance policy or you could fund the insurance policy. That's not available to anyone at the moment. How does it work at the moment in the insurance industry? Where does all that money come from to pay out all of these policies?
Mo, you have the
Yeah.
lowdown there.
Yeah, absolutely. So right now, regulation constricts people from participating in insurance. The beauty
Uh-huh.
about blockchain is we can have a simple KYC and we can have the protocol protecting people, and that's the beauty about it. Transparency is there, and contract certainty, which is the key word we want to use here, is going to be there too. So that's why oracles and parametric is where we're going to try to get this extra money that's just sitting around, not being used, going to be used to supply the policy, the funding.
This is a little bit off topic, but I've always wondered about like some of these insurance policies that fire insurance, and then suddenly there's wildfires. Like here in Australia, it's the last thing that you want to do, like insure all these homes in the bush for fire protection. You get a bushfire every summer and just wipe out all of these homes, and they're like millions and millions of dollars need to be paid out. Like I'm just trying to understand, like if you guys try to set something up like this, like how would you get that type of money to fund these insurance policies?
So these would be called insurance-linked securities, sidecars. Basically, now banks are getting involved in this right now, more than insurance companies,
Yeah, okay.
because they see the opportunity there. Um, Basically, they would buy a first layer of protection, and that would be kind of like the most expensive part. And then they would need for that blue moon catastrophe part, where not like 50% of the forest, but maybe 100% of the forest burns down. And that's where banks would get involved and say, you know what, insurance companies, we want to have a slice of that cake. And that's where we come in as a protocol. We're going to provide something called the same thing, ILS. It's an insured linked security. So it's insured dollar to dollar. An insurance company has an advantage of insuring multiple risks on the same capital. Their capital is $50 million, and they can insure up to 100,000 cars, 200,000 cars, and they can keep doing that because they have a security rating. Versus banks, they can't provide insurance. It has to be one to one. FIDA protocol is going to be like that. So it's as strong as a bank. You don't need rating,
Gotcha.
transparency.
And you think forward a couple of years, and you can also eventually get the diversification that you get from with the risk rating for the whole protocol, depending on where we like which jurisdictions we come into, and then you as an individual get the same considerations because you have as diversified a portfolio just as a smaller scale as one of the biggest insurance companies in the world. So it's really empowering.
What's the legals behind this? Like, how do you legally have these policies converted to the crypto blockchain smart contract side of things? Like, you got all of these uh, legal documents. You get like a product disclosure statements from your insurer, and it's that thick when you print it out. How do you convert that to a smart contract and make it blockchain friendly?
Well, it really depends on where, like, what is the regulatory body, and then this is where we need to work with them, alongside them. And for example, already in Argentina, a smart contract is now considered legally binding. There's
Wow.
also
Okay.
there's also jurisdictions like Bermuda where you can operate these uh, I'm going to call it systems, or these protocols, in a way that the regulatory body recognizes them and says, yes, I see the smart contract. It is holding this amount. It has this link to a PDF, right, with all the details that is hashed. It is a secure, immutable link to the document, which is also stored, and we recognize it. We recognize it is what they say. Maybe this is way beyond the initial scope of our first baby steps, right?
Yep. Yep.
But that's where we're going.
But I have to add, we're not reinventing the wheel. In Bermuda, in UAE, they're giving insurance and reinsurance licenses. So it's not a matter of
Yes.
does it exist. It's a matter of which one we want to choose. We're now debating whether to become an insurance and reinsurance broker, because then we don't hold the liability as what FIDA is, what's supposed to be. But also there are licenses for reinsurers, which is the ILS. So again, we don't want to track into that because then the cost of operation will be high. We think being a protocol holder with a reinsurance brokerage where we don't hold liabilities, but we are the people managing the risks, getting risks and supplying risks.
You're going to do small steps first. Like, you're obviously not going to go for the massive insurance policies out there and insure all the homes here in Australia for fire insurance for bushfires. That's just crazy. Where are you going to start? What's the process here?
Pains, go ahead.
Yeah. So we're providing a product. I think it's the first of its kind on any blockchain. The story goes is we were going to onboard about 7 venues in Dubai. And all these venues had just like what would happen to our holders in case of a scam, or in case they get attacked, or they lose their wallet. All these really basic onboarding questions for their customers, and we didn't have a solution. And at the time, I was with the project called Chilled Kongs, and it was lively. It was there. Anybody who joined, they were very welcoming and guided people, but it wasn't in a controlled format. So this is what we're doing in Pains. You buy the NFT, you become insured, and you have 3 verticals of protection. The first one, education and awareness. If that fails, you have a live line of 24/7 contacts. If that fails, we'll compensate you. Of course, we're not going to compensate the full loss. It's going to be controlled. So a nice way to this is to control moral risks, which is somebody who's going to just play around and abuse the system. We share the risk with him. That's the type of control we use. So instead of paying 100%, we'll pay 50%. So he shares the risk. We have people who are abusers. They will come and just issue a claim every minute. You control that with deductibles. Until it becomes costly for them to say, you know what, I'm not going to report because most likely be rejected. So, or I'm about $100 more than the deductible. So no need for that. So again, there's ways to control the policy, and there's types of coverage to provide in the policy. And that's something that hopefully we're going to launch very soon. I'm very excited about it.
Yeah, you could
All right.
think of insurance as one of the first industries where it was all about aligning incentives. Maybe that's a phrase you've heard others in blockchain also mention. So it's a really nice marriage between these industries, and we have a ton of opportunities legally. I believe this is very much possible. It behaves as if it were a mutual, where the community is just insuring itself, and that lets us be global and avoid the regulatory loopholes, which is something that just comes later.
So we're not using any token to fiat. No, we're just using it token to token. So we don't need any regulatory body to say we need to follow certain regulations. No, we're gonna stick to ADA. So we're gonna receive income and mutual funds in ADA,
Gotcha.
and we're gonna give back in ADA. And we think this is hopefully going to be a good way to onboard people. Everybody has it. Binance to KuCoin, they all have these insurance and protection systems there. And as a Cardano, as a community, we don't have it. We have self-insurance. People are paying their communities in case of a loss, but it's not organized and systematic. There's no method to this. Recently, we had the Yumi loss, right? And you have amazing project like Snick and Husky Token giving away a big drop to a lot of the Yumi holders. There's better ways to do this. Can we first identify the scam wallets who hold Yumi? Can we first identify the old team members of Yumi so we don't give them any more remunification? There's no need for that. So there's ways to control self-insurance. We just want to add method to the chaos.
That's brilliant. Okay, you put it that way, it just all makes sense. So this sounds really good. Okay, from a person that I'm thinking about the incentives here, incentives aligning. If I was to fund a policy, what type of returns are we looking at?
It'll depend, and it'll get higher with time. But our aim is to be competitive for just ADA is above 12%. Right, that's we can get higher. It'll depend on how well we integrate with the ecosystem, et cetera, because you get that as well. You can do the collateral if can be put to use, which you can't as a bank. But you can on a blockchain, because you also have guarantees of immediate withdrawal yourself, right? So we're playing around with that. You can think about those numbers.
It's going to be a big depends. It depends on a line of business, the product, what are you insuring, where are you putting your money in. Some have high returns, low returns. So in cyber, for example, so you'll have an opportunity to invest in pains and get returns on pains, the cyber product that we're offering. To us, I'm aiming at a 60% loss ratio. So if we collect 100,000 premiums, I expect 60,000 to go in losses and 40% to be retained as revenue. That's what I think, at least from our initial projections. So that's how we look at it. But you could lose it all, 100%. But again, we're not here for 1 year. We're not here for 2 years. We're here to build something that's not been built before, and it will take time to fine tune.
Okay, guys. I have to ask, what's your experience in the insurance industry? Like, are you guys insurers? Have you worked in insurance for a long time? Like, what's the idea there?
Mine is purely passion. I am a developer by trade, and I've been learning about insurance just with this project. But I think, Mo, your history is slightly different.
I think I've been in almost every line of the insurance industry. I was a surveyor engineer. I was an underwriter, then for facultative business, which is basically single risk. I've been a treaty underwriter, which is basically a large contract between two insurance companies. And recently, I'm an executive in an insurance company, and also having a new role hopefully soon, also as another, still same role, executive in a different company, which I can't disclose at this point. But yes, no, I sleep, breathe insurance. I've done the same product in real life a couple of times in the Middle East. I believe we can do the same product here on Cardano with the same systems. It's just a matter of it works there, and I think it's going to work here.
It's good to know that type of background. I was wondering if you had some insurance background, but it sounded like you did. So that all makes sense to me now. All right, guys. Is there anything else that the community needs to know about your platform?
Well, we have a link tree you can get to. So Fida _finance. We are on, that'll get you to our Discord, our X or Twitter account. And we have a couple of proposals on, well, one proposal on Catalyst for this marketplace, which is the core of what we've been discussing. But there's a bunch of interconnections with a proposal with NMaker on bringing in like satellite evidence, right, as an oracle images, and now you can do farmers insurance. So that enables a product, right? And we're mentioned there, but it isn't exactly. It isn't our proposal, right? We're just, you need to think of it as something much broader than just one of the teams. There's also Pains, which is the insurer for the cybersecurity and this better way of mutually insuring ourselves against rug pulls. And we're definitely going to collaborate with teams like Cerberus to expose the risk around these wallets and tokens, and it's a long haul, but we're in it for it.
Yeah, no, buy Pains. Let's go. And it's not for us. It's not. We've been here for 2-3 years. We can see a scam a mile away. It's not for us. It's for our friends. It's for our families. It's for bringing people on board, and that's what it is for.
Brilliant, guys. I'll put the links to all of that, your socials, everything, and the Catalyst proposals. So I know it's Catalyst season, so all these exposure to these proposals is really crucial at this time. So I'll hopefully people can check them out and support what you guys are building, because I think this is very unique. I haven't heard of anyone else tackling this insurance on blockchain. So it's definitely a challenge, and good on you guys for tackling it.
Thank you so much for having us.